Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the TheoTrade video for the 25th of August here in 2022. We have a big day. Friday is the day we've been waiting for all week. And with the exception of today's session on Thursday here, where the market went trend up and closed off at the high of the day, in terms of the indices, they were up about 1% or more. We are going to look forward to Jackson Hole. We're going to look forward to some consumer spending numbers, specifically on the consumer sentiment and core PCI. Which one will move the market? Take your pick. It's just a volatile event. Think about it like a binary event where the market's going to push either direction. So that will be the logic and the discussion and the plays and the trades for tomorrow. Let's get started by setting up what we're expecting, what times things will happen, and of course how that might affect the intraday trade. Let's just get started with the core CPI. Going to have the information. Of course, we're going to have some personal income, spending, etc. PCE, PCI. That is an hour before the stock market opens. That'll be first. Right after that, we'll have wholesale inventories. Not a big mover. Consumer sentiment will take place at 7:30. 7:30 is about 30 minutes after the market is open. That will be, there's our previous expectation, the value, and of course that'll be consumer sentiment. That's Michigan, University of Michigan Consumer Sentiment Survey. That'll come out at 7 o'clock on the West Coast. But there's one more thing, and it's the Federal Reserve Chairman, Jerome Powell, will give his, what we collectively call the Jackson Hole speech. What is Jackson Hole? It's an economic symposium. It just takes place once a year. We have the Fed days every 8 times per year. So not necessarily monthly, but 8 times per year. That's when they adjust their rate policies and they make any projection about the future of the economy and the funds rate and etc. But this is a once in a year thing, and it takes place toward the end of August. It'll be tomorrow. It could be a major market move, bull or bear, we don't know. So we'll be watching these very closely. Here's how we can get a sense about how far the market can move, how to set up any intraday trades, whether to stand aside, be safe, or to continue holding or pressing positions that you already may have. We'll start this in a couple of ways. Just for the sake of the video, just highlight how this could be done. Think of it like an earnings play. Speaking of earnings, we just had Nvidia. Nvidia had its earnings worse than expected, but they did guide, and the stock was actually up about 4% on today's session after the earnings. That's how to think about the binary event, or at least these events coming together. Not so much with Nvidia, but looking at, we'll start with SPX. SPX is our broad S&P 500 index. It's actually tradable and does have options to trade if you wish to do that. It's a bigger contract than the SPY or other related stocks. But it has a Friday expiration implied volatility of about 30%. And that's going to translate into an expected move for tomorrow's session of about $51.60. How would that translate or relate to the chart? Let's take a look. So on the big picture, we'll just go to the hourly chart. These are expected move logic. These are auto-generated expected move levels. We'll actually do that here just to be a little safe on that chart. So what does that mean if we think about an expected move of about $52 or 52 points in the SPX? Take the close price. Again, this will all take place very early in Friday morning's tape. Take it up about $52. That'll put it right here. Take it down 52 points. That'll take it right into here. And we see a little overlap. The overlap is with the lower bound of the auto-generated SPX expected move. So in general terms, that's what that refers to with implied volatility, when we can put a point total up or down 51 points. That same logic would play right there with the SPY. And I have these levels in the SPY already drawn. But the SPY, it will have a 30% implied volatility, no surprise, with a $5 and almost $5.28 expected move. That also takes it up about $5.28, right about there. But it also takes it down right to the lower bound of its expected move. So that's all that the option market is giving us in terms of planning in any particular intraday trade. So some intraday trades would be if the market does gap to the upside and begins to trade higher, that could lead to some bullish intraday opportunities. If the market does gap and start to trade lower after that first 30 minutes or a little bit beyond, that could give rise to a down move, and that would target the lower bound of the expected move, or as we have our earnings-based, or not earnings-based, our news volatility-based expected move. The same logic will play into the NASDAQ, which has also a 30%. What that's translate to a 213 expected move. And then we'll go to the Russell index. It has a 31%, all about the same. That will translate to about a 33 up or down expected move. So that's the logic going into we'll call it a binary event. Binary just means either going to be big to the upside or big to the downside. And yes, there's absolutely a possibility or chance that the market doesn't react to these events. But volatility is priced in, and that's the key thing as we go into Friday's session. So on the big picture, where are we in the grand scheme of things? Still in a downtrend, still playing off these lower lows, lower highs, and we'll pull this up to the daily chart with the averages. That key point is our this much and no more, which was the 200-day simple moving average. That was just above 4300 in the SPX. Similarly in the NASDAQ, this much, but no more. So as we go into the big events, I definitely am tempted to say Jackson Hole is the event, but it's not just that. It's inflation data, it's consumer sentiment data, and anything else that takes place outside, things that we can't predict. We can't predict anything, but we can get a sense of probabilities and price targets and where to put risk, where to put the reward, and hedge positions that we may have open in a swing or longer duration. And those may not be as affected as intraday traders or very, very short-term traders. So outside of all of this, there was earnings in Nvidia, and it was a surprise how weak the earnings were, but that didn't matter to the stock. It again closed its price at the high of day. That's right alongside the other equity futures. The bond market as well, TLT, the bond market, it traded up off of its target, this 110 or 111 per share level, that almost got a full play to the 110 in terms of TLT. That same logic plays off in ZN and ZB. So if you do have positions that are not necessarily in the equity market or stocks or ETFs, you might be watching the bond positions or yield, because yield has taken it right back, as we've discussed in earlier Theo evening videos, toward that 3% level. So that's a great spot for the market to be perfectly poised and perfectly balanced right at the 10-year note at 3% before Chair Powell, gives his annual speech or the annual update from the conference or symposium at Jackson Hole. And the other major stock in play, as we go to discuss some of the stocks, would be Tesla. Anything abnormal or unusual about its chart? No, nothing unusual about the chart, but any annotation you may have, or trade ledgers or journals, anything you might have put on your Tesla chart, it's going to be way above the price, because Tesla had its realized split take place today. Not a big change in the stock. Tesla was actually flat on the session, but nonetheless did have its stock split. So that will affect certain things if you are doing end-of-day study or end-of-day charting or journals or updating positions, because this is a split. Tesla is not down 66%. It is not making 52-week lows, but the way the computer or the scans update it, just note that any scans you might take, if Tesla shows up, that would be a one-off or a special event, which is a split. That's just how the data reports the percentages. So that could be a difference change. Speaking of things that are making new highs or new lows, we'll finish up by discussing some big picture plays. And there are not a lot of stocks that continue to make new 52-week highs. But some of the stocks that are making new 52-week highs continue to make those highs, and we'll just make another quick note about some of them. So we'll look at this in terms of the big picture daily chart, and over to the right, the weekly. That would be Occidental, which is making a new 52-week high. That's the weekly on the right, daily on the left. We'll have ALB. We'll take a look at CF Industries, making new highs. And Quanta Services, a couple more. CH Robinson Worldwide, and we'll have the others that just will be small market cap names. I like to sort stocks making new 52-week highs by market cap. And what this is telling me is that there's not a lot of stocks participating in the market rally. The market itself is not at those highs, but some of the sectors are coming down from them, utilities being one of them. And the other that was close to the highs was energy, and that's on the back of crude oil. As we go into Friday's session, keep close watch on positions, keep close watch on hedges. Be careful, be safe. There will almost certainly be volatility. That will be true in the individual ETFs, which you can also view and hold positions. Each ETF should report high volatility for Friday's session, and the broader market itself is reporting high volatility for tomorrow's session. You can quantify that by that expected move type logic that we use for earnings. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for August 25th, 2022.